Assalamu alaikum. Today we discuss about mortgage system of a bank. Mortgage basically it is used to creating charge against immovable property, which includes land, buildings, or anything that is attached to the earth or permanently fastened to anything attached to the earth. इनके कहने का मकसद ये है कि ये चीज़ें बैंक में यूज़ होती हैं. जैसे फॉर एग्ज़ाम्पल कोई पर्सन बैंक से लोन लेने जाता है और उसे वहाँ पर मतलब डिमांड की जाती है, किसी भी किस्म की या सिक्योरिटी चाहिए होती है. उसके अकॉर्डिंग जब उससे मतलब पूछा जाता है कि उसके पास क्या क्या है, और वैसे तो ये डिफरेंट तरीके होते हैं जिससे वो ये चीज़ें वसूल करते हैं, लेकिन मेन चीज़ जो होती है वो लैंड होती है. अगर इनके पास मतलब पर्सन जो कि लोन लेने गया उसके पास अगर ज़मीन है जो कि उसकी अपनी या उसके अपने नाम पे है, तो अगर उस मतलब उसको वो अपने कब्ज़े में रख कर उसके थ्रू वो अपना लोन वसूल करेंगे तो वो मॉर्गेज सिस्टम कहलाता है. वैसे तो बैंक डिफरेंट तरीके यूज़ करता है, लेकिन आजकल जो बहुत ज़्यादा है वो मॉर्गेज है, क्योंकि मेन चीज़ होती ही ज़मीन है जो किसी पर्सन के पास होती है. और ये सारी चीज़ें उसके अबाउट ही हैं कि मॉर्गेज सिस्टम बेसिकली होता किस किस चीज़ पर है. जैसे अगर हाउस है, फॉर एग्ज़ाम्पल उसका हाउस है, तो उसके अंदर पड़ी हर वो चीज़ जो कि मूवेबल नहीं है वो भी उसी चीज़ मतलब बैंक में वो लोग मॉर्गेज सिस्टम में ही ऐड करेंगे. और इसके अलावा इसके कुछ थीसिस हैं जो कि मैंने नेट से निकाल कर रखे हैं. फॉर एग्ज़ाम्पल इंट्रोडक्शन में कर देती हूँ. मॉनेटरी policy plays a central role in business cycle management. One of the primary transmission channel for policy action by the Federal Reserve to stimulate household consumption by lowering rate of cost of consumer credit. Although monetary policy accommodation affect all household borrow rates from credit card to auto loans, its potential is arguably greatest in mortgage markets. There is a rather straightforward reason for this. Housing constitutes the large and most widely held asset of US households, with 78 million homeowners owning through $30 billion of real estate. ऑलमोस्ट 30 ईयर्स फिक्स्ड रेट मॉर्गेज होता है जो गवर्नमेंट वसूल करती है. यूएसए में तो बेसिकली इतना ही चल रहा है, और इसका इंस्टीट्यूशन बैकग्राउंड 30 ईयर्स फिक्स्ड रेट मॉर्गेज एंड गवर्नमेंट इन्वॉल्वमेंट इन द यूएस मॉर्गेज मार्केट सिस्टम. द predominance of 30-year fixed rate mortgage in defining feature of the US housing finance system with significant implication and transmission of monetary policy. And also included monetary policy and mortgage rates. Before turning to our discussion how changes mortgage rates affects how to balance sheet and spending via mortgage refinancing, we consider the question whether the Federal Reserve influence the interest rate which household and firms can borrow. This question has long been studied by economists but significant progress has been made in recent years using new data and innovate empirical method. Mortgage refinancing and equity extraction over time. In order for monetary policy to successfully by transmission to household sector must exercise their option to refinance. However, transaction costs such as origination and title fees as well as tax drive a wedge between interest rate change and refinancing activity. Because of the transaction cost, mortgage rates must drop by through justify refinancing. Impediments of refinancing. The discussion above highlights that borrowers may not refinance even when rates have fallen, and then option is the money. In this section, we discuss both demand side and supply side factors that can inhibit the refinancing channel of monetary policy. Behavior impediments to refinancing. In order to determine whether the household refinancing choice is optimal, researchers have compared the benefits in room of reduced monthly payments for refinancing at today's interest rate of the transaction costs. In an influential paper station 1995 explicitly modeled transaction costs and found out mortgage holders often behave through they face extremely high costs. Those borrowers who fail to refinance sometimes refer to the literature with their heads in sand. Examining the mortgage market December 2021 Key Pope and Pope 2016 estimate that 20% of unconstrained households on the basis of house price and obligation for home refinancing was optimal based on the Agarwal et 2013 optimal rules had not done so. This decision was quite costly. Keys at 2016 estimate that median household would have saved $160 per month in interest payment and $11,500 is discounted present value terms over the life of loan. Refinancing mortgage payment size and consumption. This section explored the micro and macroeconomic consequence for refinancing where there are number of impediments and refinancing as discussed above. Here we consider how refinancing affect household consumption and investment conditional on having refinanced. Selection issues complicate the estimation the casual effect of refinancing on consumption. Household must make an active decision to refinance and this decision will reflect generally unobserved individual factors such as liquidity, time reference and financial literacy. Further complicating matter varies across household in their marginal property to consume may be correlated with these factors.